Howdy, everybody. Welcome to Liberty Call. Today is Thursday, June 12th, 2025. Hope you're having a fantastical day out there in the interwebs. It's kind of gloomy here in Colorado. We got storms coming over the range, which I don't like. So anyways, I apologize about being a little late. Had to run to town for some errands. Show note, there will not be a show tomorrow. I am traveling to Missouri to go visit a good friend of mine. His oldest has graduated high school. So I'm going to go visit with them for the weekend. So my wife gets to stay here on puppy duty. So anyway, so no show tomorrow. I'll be back to work as normal on Monday. So, all right. Well, markets nudged higher today as cooling inflation and falling treasury yields lifted investor spirits. The S&P and NASDAQ climbed while the Dow stayed mostly flat. Well, not so much. The U.S. dollar hit a multi-year low and gold rallied as global uncertainties lingered. Boeing dragged on sentiment after an Air India crash linked to its Dreamliner, but Oracle surged on upbeat guidance. All eyes now turn to the Fed and trade developments. So before we break all the news down, I need some help from you. If you could, give me some thumbs up, a like, share, subscribe, follow, and press that notification bell. Because again, I say smart things guaranteed 2 days a week. So you got to tune in every day just to see. So I'm not going to be here tomorrow. So today could be the day. All right. Let's get to the markets for today. Dow is up 0.24%, 101 points, closed at 42,967. S&P 500 up 0.38, 22 points, closed at 60.45. The NASDAQ up 0.24%, 46 points, closed at 19,662. The VIX was up 4.4% today. It's at 1802. Canada up 0.35, Brazil up 0.49, and Mexico up 0.11. Jumping over to Europe, Germany down 0.74%, the UK up 0.23%, France down 0.14%, Netherlands down 0.54%, Spain down 0.32%, Italy down 0.58%, Switzerland up 0.14%, and Portugal up 0.64%. Russian exchanges not open today. And we'll get to the overnights. The Nikkei in Japan was down 0.65%, Australia down 0.31%, New Zealand up 0.34%. In China, the Shanghai flat up 0.01, Shenzhen Component down 0.11, China A50 down a quarter, DJ Shanghai up 0.06, Hang Seng down 1.36, and Taiwan weighted was also closed. All right, so that is the markets for today. Good stuff. Let's jump into our market recap. SP 500 cuts losses to close higher amid Oracle-led surge. Let's see what went on there. The SP 500 closed higher Thursday, reversing an early losses thanks to a strong rally in tech stocks led by Oracle and further signs of cooling inflation. Oracle stock hit record highs after the company lifted its annual revenue growth forecast to at least $67 billion for fiscal 2026, implying a 16.7% growth fueled by booming AI demand. Deutsche Bank praised the company's outlook, citing massive bookings and projected doubling of its $138 billion backlog. Meanwhile, Boeing shares fell sharply after a fatal Air India crash involving a 787 Dreamliner, and GE Aerospace also declined due to its engines powering the aircraft. Inflation data continues to come in softer than expected. The May Producer Price Index, the PPI, rose just 0.1% below forecasts, while the annual PPI rate ticked up to 2.6%. This followed a similarly mild consumer price index reading earlier in the week. Despite softening inflation, economists expect tariffs could reignite price pressures later this year. President Trump ramped up his criticism of Fed Chair Jerome Powell, calling for a full percentage point rate cut to save $600 billion in interest payments. Well, people in Washington probably should have thought about that before they ran up $37 trillion in debt. Now they're worried about how they're going to cover all that interest payment. So, maybe slash and burn the federal workforce, slash and burn all the federal stupid projects that don't fall within the jurisdiction of the Constitution. You could probably slash half the budget like that overnight. All right. Trade tensions resurfaced after Trump warned of potential auto tariff hikes and said letters detailing new tariffs would go out to trade partners soon. The current 90-day pause in his broader tariff plan ends July 8th, and so far only a deal with Britain is confirmed. Oil prices trimmed losses on fears of Middle East supply disruptions, particularly involving Israel and Iran. Energy stocks saw slight gains as geopolitical risks kept crude traders on edge. Overall, markets balanced optimism in tech and cooling inflation with renewed trade and geopolitical concerns. Good stuff. All righty. Well, let's get to a data report here from our friends over at First Trust, the May PPI. Mr. Andrew Opdyke put this together. So let me get my summary up here. Despite widespread concerns that tariffs would reignite inflation, the May Producer Price Index, the PPI, showed only modest gains, reinforcing the notion that inflation pressures remain subdued. Producer prices rose just 0.1% for the month, following declines in both March and April. Even the often volatile food and energy categories were stable, with food up only 0.1% and energy flat. Core producer prices, which exclude food and energy, also climbed 0.1% in May and are up 3% over the past year. Goods prices, which would be expected to feel the brunt of rising import costs from tariffs, only rose 0.2% in May. However, they are still down at a 2.8% annualized rate pace over the past 3 months. Increases in prices for tobacco, poultry, and gasoline were partially offset by declines in jet fuel, pork, and scrap steel. Boy, those are a combination of things. On the services side, representing a much larger portion of the economy, prices increased by 0.1%. Wholesaler margins rose 0.4%, while transportation and warehousing services dipped 0.2%. This cooler than expected inflation data comes ahead of the Federal Reserve's policy meeting next week. While no immediate rate cuts are expected, the lack of inflationary pressure may fuel debate among Fed officials, highlighting flaws in current inflation forecasting models. Meanwhile, the labor market remains relatively stable. Initial jobs claims were unchanged at 248,000, and continuing claims rose to 1.956 million. These readings suggest ongoing, though slower, job growth as the U.S. economy moderates in the face of higher interest rates and global uncertainty. All right, so that's that. And I got one more article here. Can you wait? Are you excited? Are you on pins and needles? I know you are. All right. From investing.com, U.S. household wealth dropped in the first quarter as tariff concerns hit stocks. This is more of a lagging indicator. Usually, it's kind of like the jobs numbers. Usually the economy falters a little bit before the jobs numbers really start to accelerate. U.S. household wealth declined in the first quarter of 2025, according to the Federal Reserve data released Thursday, as a stock market sell-off weighed heavily on net worth. Total household and net profit net worth dropped to 169.3 trillion by March 31st, down from 170.9 trillion in the previous quarter. This marked the first quarterly decline since Q3 of 2023 and the lowest level since mid-2024. The downturn was driven primarily by a 2.3 trillion decrease in the value of equity holdings, reflecting investor concerns that President Trump's tariff policies could fuel inflation and recession. Real estate values also dipped by 200 billion amid continued declines in home prices. However, the losses may be temporary. Markets have since rebounded. The S&P 1500, which lost about 2.5 trillion in Q1, has recovered roughly 1.2 trillion, returning to near levels seen at the start of Trump's second term. The Fed's report also noted a slowdown in overall non-financial debt growth to 2.8% annually, down from 4.7% in 2024. Federal borrowing decelerated as the Treasury operated under debt ceiling constraints. Meanwhile, household debt grew at just 1.9%, its slowest pace since early COVID-19 lockdowns, while non-financial business debt increased 4.8%, fueled by rising bond issuance. All right. So it's not all bad out there. I mean, it's certainly, we got to go through, I think, some bad stuff to come out the other side. But all in all, I think, it's certainly not the end of the world. Even when, catastrophe occurs, life still goes on. I mean, I remember back during the housing bust in 2008 and 2009. I was sitting in San Antonio when Lehman Brothers went belly up. And I'm sitting there at the computers because Hurricane Ike was coming through Houston at the time. And I'm sitting at the computer banks that they had in the lobby and, sitting there watching the news. I'm like, oh, my God, what is going on? So, all righty. Well, that is everything that I had to cover for today. So if anyone needs to get in touch with me, where do you want to go? DSAFinancialGroup.com. All your financial planning needs can be addressed there. So give me a call. I'd be glad to help. All righty. Well, hope everyone out there has a wonderful evening. Like I said, no show tomorrow. And you can see my boy, they're fighting in the hallway back there. That's why they're on the other side of the door. They were wanting to play when I was trying to record. So anyway, so like I said, no show tomorrow. I'll be back on Monday. Hope everyone has a fantastical weekend, and I'll talk to everyone again next time. Adios.